Today's show is brought to you by our sponsors at Betterment Advisor Solutions. Imagining a better future is the first step.
Investing in that future with Betterment Advisor Solutions is the next. Whether you're launching your own practice, looking to streamline client onboarding, or just searching for efficient ways to scale your firm, Betterment Advisor Solutions is here to help.
They automate to make tax optimization simpler. They provide support to make administrative tasks easier.
At Betterment Advisor Solutions, they are building innovative technology all for anyone who's ever said, I think I can do better. So grow your RIA your way with Betterment Advisor Solutions.
Learn more at betterment.com/advisors. Investing involves risk. Performance not guaranteed. Welcome to Animal Spirits with Michael and Ben. Did Memorial Day creep up on us this year?
Are we back to middle-aged, time is passing guy?
You know,
Can I just say,
yeah.
Before we get into this, I gotta ask you a question. What percentage of your wardrobe is Knicks these days? Because I feel like it's 95%. Is that close?
After what game? What was it? Bad? What was game one? After Tuesday, it's been in a bear market, but yeah, probably 98%.
Okay, so you were in mourning a little bit. You weren't there for the gut punch game, were you? You were there for game two?
I was there.
Okay, I haven't talked to you about it. So you for the Halliburton bounce and
so thank God, I left. It was 40 seconds left. We were up, I think 8, and OG got fouled. They reviewed it, so I figured, all right, I'm leaving. Like I had a train to catch. I don't need to be part of the nonsense on 7th Avenue. And then they overturned that foul call, even though it was a foul. And thank God I watched it on the train. I might.
Oh, so you weren't even in the building for that? Okay,
No.
I agree. That would be because the silence was deafening, kind of thing after that. After regulation.
And I didn't listen to any. I couldn't listen to any podcast. No recap. Didn't even hear it. Couldn't do it. Really tough. What were we saying?
Oh, I can't believe it's Memorial Day already.
Old man conversations at the beach club this weekend. Me and some of the dads were talking about the Merrick train station parking lot and the this and the that. I'm like, oh my dick, guys, we're so old. This is we're talking about where to park. Okay, we're coming to Chicago next week, as mentioned a couple of weeks ago.
Can you believe it's gonna be June already? Next week?
I can't believe it. Unbelievable. Where does the time go? And I'm very excited. I looked at the forecast. The weather is immaculate. The vibes shall be great. It's our biggest RWM getaway. I think we've got almost 50 people coming. We're doing an event at the Salt Shed. We are excited to say the least. So we will see you there, or we will see you at another time.
Yeah, we'll be doing the live compound. You and I will be recording Animal Spirits from somewhere in Chicago, probably our new office. One of those days. And this will be our first of 2 trips to Chicago in the month.
Yeah.
So you and I are seeing each other a lot lately.
Can't wait to see you.
Keeping things fresh. So if you're in Chicago, come say hi. All right. So last week, the new worry, and I feel like the market only has room for one worry at a time. This is a theory I've been thinking for a while.
Oh, I like that take.
You know, we just short attention spans. We've already kind of moved on from tariffs, and it does feel like the market just slapped the wrist of the tariff policies. And even when Trump says, I'm going to do 50% tariff on Europe and Apple can't make their iPhones in India anymore.
You know what the market said?
No one really believes it anymore.
The market said, I don't believe you. It was the Ron Burgundy. Because on Friday, we gapped down a 1% or so. And given the incredible rally that we've had in stocks, I don't think it would have surprised anybody if we said, oh shit, here we go again. The market's down 3% heading into the weekend. Who wants to be long on a 3-day weekend? Stocks close to the high of the days. Bond yields were relatively unchanged. And so sure enough, I guess the market got it right this time, because on Sunday he said, just kidding. We're gonna punt that to July 9th.
We've moved on from my children having to work in a sweatshop again and create our own t-shirts or something. So the big worry last week now is bond yields, right? And it wasn't just the US, but I pulled up I typed in bond market or something like that into Google and look at all the top stories, right? Is this the breaking point for the US bond market? Oh, GOP bill locks in new deficit as bond market quakes. And it's all these scary headlines of bond yields are rising, this is bad. And then people were tweeting about Japan. This is from Bar Chart. Their 40-year bond yield hit 3.6%, all-time high, which is kind of nuts if you think about it, an all-time high for long-term bond yields. And so the question for people is, okay, rising bond yields must be bad because people are worried about the deficit, they're worried about government spending, they're worried about inflation. It's a worry about something. And maybe these things are true, but my whole point is let's just take a breath on the bond stuff. And every time yields rise, we get worried. And every time they fall, we get worried.
Yeah, that's a good point.
it's been in a 4 to 5% range for, I don't know, 2 years now, ish.
Yeah. Can I say that I'm not worried? Like, I don't want to completely sweep it under the rug, but I will also say that what you just said is valid. Let's take a breath.
So I think part of it is we were accustomed to such low yields in the 2010s that what if this is just a normalization? I looked at the average returns or the average yields by decade for the 30-year treasury.
Don't come at me with average by decade. Who cares?
So it was 11% in the 80s.
Okay,
in the 90s it was 7%.
Erroneous. This
in the
economy
2000s it was 6%.
Erroneous.
But now look at this. Look at the chart of the last couple of years. It's averaged 4% and it's been in a 4 to 5% range forever. And every time we go up, we go down.
What's the opposite of erroneous? Is it erroneous?
I don't know if there is. That's
because that's valid. It has been in a range.
But and I even pulled up the returns for like the 10-year treasuries this year. IEF is the 7 to 10-year treasury. Okay, people are freaking out about bonds. This is up 2% this year. Now most of that is yield because rates have kind of gone nowhere. But are we really having a bond freak out? Because bonds are up 2% over the last year. They're up like 5%.
I'm not freaking out. In fact, last week I bought zeros and TLT.
See, I feel like the timing of the duration never works though.
It worked last time I bought it.
Who has the ability to time duration like this?
Me, easy.
So you're going to do the range thing? It gets to 5, you're buying duration. It gets to 4, you're lighting up. Is that your plan?
I don't know. First of all, for the record, I'm obviously kidding, but this is not like a buy and hold for me. I'll sell it if it rips.
Well, I hope not. Yeah, that'd be a crazy sort of buy and hold product. So Matthew Klein at the Overshoot, which I feel like he's always kind of a calming voice. And he said, what if this is just what normalization looks like? And he looked at Japan and he said, listen, if you look at what Japan was like in the years prior to the pandemic period and post-pandemic period, their inflation was a lot lower, their growth was a lot lower, their spending was a lot lower. And now if you match up where the growth is, where the inflation is, where the spending is, these rates make more sense in this environment. And he also, I've seen a lot of people poking holes in the whole deficit thing. People saying like, well, the new tax bill is going to add so much money to the deficit. It's crazy. So he said the U.S. Congress is moving forward with a budget plan that would not lower most American taxes relative to current rates. Yeah, so if you look at it, a lot of it is just keeping things the same. It's lowering for some people, not very many. We talked to Bill Sweet about this the other day. We said, Bill, what's this going to do to our taxes? He said, nothing. It keeps them the same, but no material change. He also said it would meaningfully cut spending on health benefits for the poor for Medicaid, food aid for the poor for SNAP, and subsidies for green energy. The budget is also set to sharply increase taxes imposed on premier research universities. So
remember Doge? That was cute.
Yeah. No, but he says, combined with tariffs, which are taxes imposed on Americans, the net effect should be contractionary relative to the current fiscal stance.
Interesting.
But you could say, well, what if the tariffs continue to come lower than that? So it's kind of a wash, essentially, is what he's saying. Not nearly as bad as. So what if this is just normalization? Because look at the yield curve. I pulled this up from. I feel bad. I had Sean make me a yield curve this morning, and I said, "Oh, wait a minute. Why did I have Sean do that? We probably have one on Exhibit A." So I went to Exhibit A. So I got a yield curve, and it shows the yield curve from a year ago and the yield curve for today. So I remember. I'm old enough to remember. That's something people say on a podcast. I'm old enough to remember when the inverted yield curve was a problem. Remember how scary that was? Inverted yield curve always leads to recession, except for this time. Now the yield curve is becoming uninverted. Look at this. Is this not normal? Is this normalization to you?
Looks like it to me.
Now the retort is just wait, Ben. The bad stuff, and maybe this is like the American exceptionalism premium going away, and people are worried about deficits and government spending. Because I really do believe. I think I tweeted this the other day. I know people get really angry, but my baseline assumption is government debt will continue to increase, government spending will continue to increase. Maybe voters will get mad enough eventually that they'll put someone in office who will not.
There's no reason to think anything else.
Exactly. Like you can get mad at it, but that's the baseline assumption. That should be your baseline.
Mm-hmm.
And that's my baseline. So what if this is just a normalization and people are freaking out? And the thing is, the world we live in now is maybe just higher bond yields on the long end. Because I thought it was crazy. It was nuts when we had 9% inflation and higher, longer-term bond yields didn't budge at all. Right? Remember, they didn't move up meaningfully. It was just short-term rates. I think this is just normalization. Fair enough?
Fair enough.
All right. What's my favorite thing about Wall Street Journal articles?
The anecdotes.
The anecdotes. All right. This is the gut-wrenching play in investing right now is buy and hold. So they interviewed some more people about their strategy for
you know what we should call these? We should call these anecdotes.
Okay, that's not bad. So this anecdote here is one I think that happens for stock market investors all across the country almost all the time. When a chunk of Bill Jensen's retirement savings got wiped out in early April, he started to second guess himself. And I'm coming to the point where like these could be AI made up stories, and I wouldn't doubt it, right? I'm just going to start not trusting anything just to be safe. But let's go with it. His wife urged him to consider switching their savings from stocks into safer investments, but Jensen insisted they wait for the market to rebound. He's a retired 68-year-old who tried to reassure both of them by sending emails to the gains when their portfolio had ended in green. So he's like showing her, listen, it's worked out fine in the past. 7 weeks later, the couple's investments recovered most of the losses. Rather than take risk down a notch, he recommitted to the stock market. But I feel like almost every couple has this where one of the people is saying, oh gosh, this is too scary, get us out. And one of the people, don't you think that happens all the time with people?
Sure.
Like that's a conversation people are having a lot.
Yeah, we've said this a bunch over the past couple of weeks, but I'll say it again. The market gave you a get out of jail free card. If you were like really worried and about to do something, probably do something right now.
Right. But now it's harder because like, well, what if it keeps going up? That's
no. This is easy. This is a much better.
Oh, yeah, you're right. If you wanted to lighten up, I'm curious. Does Robin ever come to you and ask you about like your investments, or does she completely
all the time? She won't stop asking me about it.
Are you serious?
No, she has.
Okay, she never.
No,
okay.
I've tried. She just.
I think my wife asked when we first got married, and I told you this. I gave her like a PowerPoint presentation of why we're going to invest all of our retirement savings in the stock market. That was all I needed to do.
You're like, Courtney, you're not listening. Eyes on me.
Yeah.
Okay, so we got an email last week that I thought was really, really fair. In response to the conversation we had last week about the investor class being more educated and better behaved. All right. Was just listening to the latest podcast and the discussion of financial education and retail investor behavior improving. I agree directionally, but can't help but wonder if that's giving them credit for what have been relatively easy tests. With the dominance of the big tech names both as businesses and stocks, and Walmart's inexplicable multiple, the S&P 500 has had an incredible run and it just keeps working. The COVID crash and the recent tariff tantrum were extremely short in duration and basically rewarded investors immediately. 2022 was a longer downturn, but even the ChatGPT reveal pretty much returned everything to normal. Buy NASDAQ, S&P, and you'll make money almost immediately. These downturns are in stark contrast to the early 2000s, the GFC. To be clear, I fully support and recommend systematic buying of index funds no matter what's happening in the market. I'm not saying people should have to do all kinds of research and or pick stocks to build a global portfolio, nor do I hope for a sharp downturn in the market just to be proven correct or deliver some kind of comeuppance. Just saying, I'm not sure the last 5 to 10 years of investors piling into the S&P 500 through mostly brief drawdowns is solid evidence of long-term discipline yet. I don't entirely disagree or agree. I think it's a fair counterpoint.
Okay. I kind of disagree because we've had 3 bear markets this century alone, or this decade alone. And it's not just the bear markets, which have been relatively mild, true. If you invested in Bitcoin, you've lived through like 4 or 5, 80% drawdowns, right?
Yeah.
If you invested in some of the individual stocks, Amazon was down 60%, Nvidia was down 70%.
That's true.
Right? Some of these are not just losses, they are catastrophic losses.
Yeah.
So even though the returns came back relatively quickly, I don't know. I mean, I tend to think the great financial crisis could be a once in a lifetime event.
So do I. Well, it could be, or it could not be.
We're going to have another financial crisis at some point, but like that one, I it's possible
It's hard to prove anything. But what if we can say that investors are generally better educated, better behaved, less prone to panics than they used to be, and also it has been a relatively benign investment environment.
What if it's a chicken and the egg kind of thing, though? The fact that people are better behaved and there's more automatic contributions, that makes the downturns not last as long. What if it's circular?
Yeah.
That's Josh's relentless bid theory.
Yeah. No, it impacts the markets for sure. But it can't save the market from downturn. It did it in 2020. It did it in 2022.
But if you look at 2022, I always break out between recessionary and non-recessionary bear markets. And if you look at a non-recessionary bear market, 2022 was textbook. the downturn, the length of time, the peak to trough, the return, all break even, all that stuff. It's a fair assessment. So we were asking, where is all the money coming from the last couple of weeks? Jeffrey Patak from Morningstar, friend of the show, sent me some numbers. Because I said it's got to be just bonds or money markets.
And wages.
Yeah. And so wages is a big one. So because wages are up, more than inflation by a little bit. But he showed, this is from April, the flows. You saw money, big time money coming out of taxable bonds and municipal bonds to the tune of almost $50 billion and over $21 billion of flows into US equities. So not all of that money went into stocks, but a lot of it came out of bonds into stocks.
That is interesting.
Right? So there is some of this. And I always say there's like, 4 reasons you buy bonds? Yield and income.
You always say that? I've never heard you say that.
Yeah, I've said it before. Yield and income, stability, like volatility reduction, spending purposes,
and all 4.
And then dry powder, right? So people are using bonds. I feel like
dry powder is a catch-all. Dry powder rolls up at the 1 through 3.
But I mean, dry powder for rebalancing.
Yeah.
All right, so here's another thing. 26 million customers at Robinhood. So I had Steve Quirk on this show on Asset Compound last week, and he talked about this. So there's 26 million customers at Robinhood now. 13 million of them, it's their first brokerage account. And a few people said, hey, what if it's Gen Z and millennials who cannot afford to buy a home, but they have that income still that they would be using to buy a home, and now they're putting it into the market? Like, you look at this. I pulled this from Quarter. It's the Robinhood deck. Net deposits in Q1, $18 billion, 37% annualized growth.
Yeah, that's something.
$57 billion over the last 12 months. So look at their deposits are growing by leaps and bounds still. And it's a lot of factors, but I guess that's part of it. Here, read this other email, because we had a lot of people who responded with this too about the money market stuff.
Okay, so we have to do a bit of a mea culpa, and Ben, no offense, I'm gonna put this on you. Although I didn't flag it, so it's on me too. Somebody said
I have a retort here, but just go ahead.
There's no retort. These are facts.
No. Go ahead.
I follow this stuff pretty closely, and the withdrawal in money markets in March and April, the last 2 years, was not to buy stocks. It is to pay tax payments. How do we prove this? Because we look for a spike in deposits into the Treasury General account at the Fed. You can look this up yourself. It didn't go to stocks and went to Uncle Sam. And Warren Pies has done a lot of work on this. There is a very seasonal component of this. So the money that came out of money market funds that we mentioned last week did not go to buy stocks and went to pay taxes.
Which is funny, which is why the stock market falls in. But here's the reason why I didn't flag this. My planning brain goes, who are the idiots who don't set aside enough for taxes that have to sell stocks to pay their taxes?
Sell stocks? These are money market funds.
Or that's what I mean. Okay, never mind. Okay, I totally got that wrong. You're right.
Yeah, that's okay.
All right, my brain broke.
No, sometimes we get things wrong. That's okay.
But it's kind of funny, though, that causes also the stock market to fall.
It does.
In the last 2 Aprils.
Yeah, Warren and Fernando have done some great work on this. Like, really, truly.
No, okay, that's what my brain is saying. So people are obviously selling stocks to pay for taxes too a little bit.
I don't know if they're selling stocks. I don't know if they're selling stocks and or just not buying enough or not buying as much.
Okay, but somehow this is. But that's what I'm saying. You don't think that there are people selling stocks to pay off their taxes because they misplan?
Absolutely. Does that move the market? I have no idea. All right. This has me excited, Ben. I'm excited. We've shared this chart before. Every advisor shares this chart. And the chart is that the odds of the S&P 500 being higher over time increases dramatically if you zoom out. So we grabbed this chart from Exhibit A.
My all-time favorite long-term stock market chart. I want to say I'm going to give credit to Jeremy Siegel for this one, probably for the first time I ever saw it in Stocks for the Long Run, but I could be wrong.
Okay. So the quote is, if you hold stocks over a 20-year period, nominally, you've never lost money. And it's powerful. And it does inspire, maybe not confidence, but it shows you stocks for the long run. But there is a huge and obvious counterpoint to this that occurred to me while I was listening to the Berkshire annual meeting. And Warren said something about the likelihood of a decline in stocks. Same thing. The longer you go out, you're almost guaranteed to have one. And I said, you son of a bitch, he did it again. So I called Matt immediately. And I told him, we got to flip this chart. And so for chart of the week, for Exhibit A, for advice.com, if you're a financial advisor, check us out. We're sending out charts of the week. And it's a new fresh chart every week with your logo on it. So what I had Matt do was show the odds of experiencing a bear market also increased by holding period. So it looks exactly the same. It's basically linear. So over any 1 year rolling period since 1950, you had a 1 in 3 chance of experiencing a 20% decline. If you go out to 15 years, it's 100% of the time. So yes, the message that advisors preach to their clients is stocks for the long run, less is more, keep your eye on the ball, the money's not for today. But this chart is equally, if not more important, because the facts are that those long-term returns are tough as shit, and they always come with setbacks.
Credit to you. This is a great chart. And I told you the one that I hone in on to highlight is 77% of the time over 5 years. So you'd tell your clients, listen, 80% of the time over a 5 year period, there's an 80% chance you're going to get a bear market. That is enough to, like, I think, help people understand the risk involved of either you have a steady hand and you hold, or you need cash, fixed income, something else in your portfolio.
In a 20, by the way, look at 4 years.
Nice.
If a client says to you in 2024, after back-to-back 20% years, hey, asshole, why am I 60% stocks? What is this nonsense? Like, why are these bonds slowing me down? You show them this chart.
Yes.
Credit to Matt. Credit to me.
All right. So I feel like I feel like rich people have always had their own moment, but rich people are having a moment unlike any other time before. They're more scrutinized than ever before. I think they're
Is this the Spider-Man meme? Are you pointing to yourself? No, Ben, are you having a moment?
No, this is like the rich people. Okay. So you saw this story in the Wall Street Journal about the jaw-dropping cost of a Hamptons Girls Weekend.
I saw the tweets.
Okay, I'm sure you saw the tweets, and it's talking about how it can easily cost $5,000 to go to Hamptons for a girls' weekend of drinks and Ubers and outfit changes and workout classes, and Haley Sachs. So I think has she been on the Compound Friends before? She's talked to Josh before. She says the Hamptons is like Disneyland now. And so she says you have to, like, go to all these places and Instagram. And obviously these are Instagram influencers. it's not real people. But I do feel like, so they talked about how there's like $97 lobster salads. And I don't know if have you ever gone to the Hamptons before? Is that your thing?
What do you think?
Probably not.
I've been.
I'm not regularly.
No.
Yeah.
No, I didn't. Come on.
But I do feel like there's something to the fact of, there's a lot of things that I think we've all I know people complained about inflation and we hate it, but I think a lot of it is just like resignation, like, yeah, this is just what it costs now. Like these things that are so expensive and ridiculous, and I can't believe I'm paying this much money. Yeah, it's like, geez, that kind of stinks, but we just do it.
Yeah.
Like, I think there's just resignation of.
What's the one thing in your life that you can't believe costs as much as it does? I'll start, and then you can think of one. So there's a Greek salad that we get here in town, and it's iceberg lettuce and, whatever. It's Greek salad, but they have great dressing. So I will give them that. It's $19. And I can't believe it. I won't order it, but Robin does.
The funny thing for me is that you go out somewhere to have dinner or go to a bar, get a drink, and you get a beer and it's, I don't know, $8 or something, $8 or $10 for a beer, right? But the weird thing that sticker shocks me is getting a 6-pack and now it's like $19. Like my good Oberon summer beer, right?
How much did that used to be? 12?
Yeah.
Yeah.
Just something like that, which is still probably a pretty good deal. But we had this conversation this week about, I'm sure you've had these conversations about houses that are in your neighborhood. Someone brings it up, like, can you believe the house down the street sold for that much?
Yeah.
And they go, in 2017, we bought for this. And you're doing the math in your head to think what yours is worth, obviously. But someone finally just said, like, that's how much houses cost now. Like kind of like just slap to the face, like, get used to it. This is where we are now. And I think that's the thing. That's my whole thing is just, I think it's just resignation of like, oh yeah, this is just how much stuff costs now.
Yeah.
And people have moved on. There was another article in The Cut titled, "It's a Weird Time to Be Rich Now." And this is
what is The Cut? I don't know what that is.
That is the New York Magazine, like one of their,
okay.
It's like the Grantland for New York Magazine, I guess. So they talk about all these rich people are going to therapists and complaining about how weird it is to be rich right now. And they don't want to be like too flashy and show offy because they don't want like people showing up at their house with pitchforks and torches, I guess. But I pulled this out. A real estate agent who sells luxury properties in the tri-state area is seeing the same thing. It's a weird time to be rich right now. All the wealthy people I know are keeping their cards closer to the chest. When people have that much money, stuff like inflation doesn't really affect them. What they do care about, though, is being judged for their conspicuous consumption. When the whole world is crying poor and you're living the life.
Conspicuous.
What did I say?
Conspicuous.
Okay, close enough. And you're living the life in this wealthy bubble, it's really frowned upon. They've all seen the White Lotus. No one wants to be like that.
Some people want to be like that. Come on, let's be honest.
Yes, but I feel like this rich people in the white, like we've shown such a light in this, and there's so many shows and Succession and White Lotus and Your Friends and Neighbors and the influencer stuff, and I just think wealthy people in the past didn't ever think this deeply about their wealth.
No. Not true. There was a lot of like Bill Gates in the 90s or whatever driving Toyotas. It's always been a thing for mega rich people to not be opulent. Did I use a word properly? Speaking of word messing up is.
But I just feel like now is it's harder than ever for an uber rich person to be happy. That's my take.
What?
You're too in your head when you're rich.
I don't know about that. You're making that up. It's never been harder for a rich person to be happy.
You don't think more rich people are miserable today than they were before? I think people are way more miserable than they were.
I have no idea, neither do you.
Because on a relative basis, you see other people's wealth. You don't think that?
I don't know. Well, but here's the part.
I think there's a lot of miserable rich people out there.
If you live in a rich town, then you're not hunting anything.
True.
It's the opposite.
Yeah, you want to flaunt it.
Yeah, if you live in a relative upper middle class town, you're probably less likely to drive a Ferrari or whatever.
That's true. There are a handful of like Ferraris, because there's a handful of billionaires in West Michigan, and you see the Ferrari, and you see it on the road, and you go, whoa. But in New York, you probably wouldn't think twice.
But if you're a billionaire, why not drive a Ferrari? Like, who cares? It's not like you could hide your wealth anyway. Listen, to each their own. I don't, whatever.
True. All right. So I pulled the retail sales graph just to kind of drive this point home about spending, and it's weird to me that you can see the charts here I circled. Like after the Great Financial Crisis, there was a new trend for retail spending, and it was down. Like we took a huge thing down, and then the trend took a long time to get back on. And since the pandemic, it's just been way higher, and it's still trending higher. And this is why it's the whole risk thing about, and obviously some of this is inflation. I just think there's a new mindset these days.
What is it?
Spending, investing, speculation, risk, all that. The 2020s is, maybe that's our roaring 2020s. It's just a risk appetite change. I'm just trying to wrap my head around it still.
Yeah. I think you're right. All right. I want to point out, so CB Insights has their quarterly state of venture report. AI now drives 1 in 5 venture deals. Pretty wild, right? We were talking to Rich Bernstein on TCAF last week. Do you know what, I don't know if you listened to the show, but if you didn't, do you know what OpenAI's most recent funding round was?
I saw it in a headline, no, I don't know.
Okay. They raised $40 billion, and you can guess who led that round. They raised $40 billion on $300 billion valuation. 300.
I thought DeepSeek was going to be the end of all these AI companies.
Here's another one. Either. 8 early stage AI companies raised.
Wait. I'm surprised that it's not higher than 1 in 5. I thought it would be 50% of them by now.
Well, for context, in 2022, it was 1 in 10.
Okay.
But you're right. I think it's up and to the right. 8 early stage AI companies raised $100 million mega rounds. That's a new record. NVIDIA, obviously they were a big backer of CoreWeave. They've done 49 equity deals. And they also show Google's done 49. Microsoft has done 24. This is since 2020. And Amazon's done 20. So I guess these are the new mega funds. Kind of wild.
I'm really fascinated by where the AI stuff goes because
Did you see the videos this weekend?
I just think that there's so many different paths we could take from it, good and bad, that I don't even think you could possibly predict what is all going to come out of this at this point.
Did you, we're going to talk about this later. Did you see Mission Impossible yet? I'm guessing no?
I didn't, but I will see it in the theater.
Okay.
I'm a TC supporter.
Sure. All right. So on Quarters app.
Did you see it?
I did. We'll talk about it in a sec. On Quarters app, I said, make me a chart of Uber free cash flow. So they have Claude and ChatGPT in there. So I said, make me a chart of Uber free cash flow by quarter for the last 5 years. And they said, there is no they meaning the the LLM, said there is no available data for Uber's free cash flow by quarter for the last 5 years. The requested information is not present in the latest financial disclosures. So in my head, I gave a shoulder shrug. I'm like, what the heck? What do you mean? So I typed to them, can't you calculate it based on the financial statements? Boom. Chart on. See that? Isn't that wild?
Took a little prompting, huh?
All I said was like, come on, man. Dude, figure it out. And it did.
Oh, that's pretty good. So there was a Bloomberg article traveling around this morning, and it said, welcome to the academia and the age of artificial intelligence. And I keep harping on this one. As several recent reports have shown, outsourcing one's homework to AI has become routine. Perversely, students who still put in the hard work often look worse by comparison with their peers who don't. So like you put in a lot of hard work on your own paper and someone else does an AI paper, theirs is going to look way better than yours. They say professors find it nearly impossible to distinguish computer-generated copy from the real thing, and even weirder, have started using AI themselves to evaluate their students' work. So students are turning in AI papers, professors are having them graded by AI. And the crux of the article was, does college still have a purpose in the age of ChatGPT? But I keep coming back to the fact that this is why being a creative person is going to be such a thing that sets you apart. I was thinking about the early days of reading Josh's Reform Broker blog, and him writing in his own voice and sharing his own inside jokes and experiences. And I think that's the blogger stuff that people really latched onto in the 2010s. I think why that whole scene of finance Twitter took off, because it was like a breath of fresh air to hear people write in their own voice as opposed to some stuffy Wall Street research piece. And I feel like that kind of stuff, the ability to write in your own voice, is going to be more important than ever in the years ahead.
I don't think the ChatGPTs of the world are going to change anything in terms of, we're not going to be all of a sudden reading stuff that is clearly generated by a computer. I think it's going to be like people like you, who are just incorporating this into their own writing.
Yes.
Right? Because this stuff it's obvious and it's sterile.
I think so too. Which is kind of funny. It says that professors find it nearly impossible to distinguish. Like, you couldn't tell that the freshman kid in your English class is all of a sudden creating way better papers. So don't you?
But wait. I'm sure you could say to the whatever program you're using and make it sound like it was written by a 19-year-old.
That's true. I mean, but couldn't you take the first day of class?
Like put in a few some grammar that doesn't really flow too well.
The first day of class, I want everyone to write a 1-page paper about this subject, and that's my baseline for your writing skills. And I'm going to be matching your papers you turn into this baseline. If you're a professor, I feel like there's got to be easy ways around this.
I'm sure there are.
Maybe they're just too lazy to figure it out. I don't know. Speaking of AI, so Michael Mauboussin had a new piece out for Morgan Stanley, Drawdowns and Recoveries. It's 24 pages or something. Now, anytime I, in the past, would get a very long
shame on you.
No, this is not a shame on me. This is just time saver. Anytime in the past I get a really long research note, I would scroll through the charts, I'd read the first paragraph, then I'd do Control F, conclusion, and then I'd read the conclusion.
I feel like Mauboussin deserves some respect. You don't chat.
Okay,
you don't chat GPT Mauboussin. Come on.
Okay, so I chat GPT'd Mauboussin, but then I went back and I read the key points. Anyway, you read this too because you put some stuff in here. Why don't you go first?
I actually have not read it yet. I read the first. What page am I on? I'm on page 2. I haven't had time to read it yet. Hey, it was a busy weekend. I'm going to read it though. I'm going to read it.
Put it into ChatGPT. So what did you pull out here then? Because you put something in here.
This is not from me.
I didn't do this.
I wonder if Sean did this.
Oh, maybe. I thought you did. That's why I added to it. Okay.
No.
All right, I'm going to delete it.
You know what? I'm actually going to read it, and I'm probably going to maybe next week we'll get to it.
Okay. So he looked at the drawdowns of individual stocks, not just the stock market, and also
why don't we read this and we'll circle back to it.
I did read it. That's what I'm talking about. I'm going to share with you some of my findings.
Your findings. This is clearly a ChatGPT finding, sir. I see it.
I know it is. And then I went back and I read it, the points that made sense. So I didn't read it all. But he's looking at they looked at 6,500 companies from 1985 to 2024. The median drawdown, and this is individual stocks, was 85%.
I buy it.
Which lasts about 2.5 years. And then he looked at the time, like the peak recovery was 90% to get back. So meaning a lot of them didn't come back. And so they said only 46% of the stocks that had these drawdowns managed to recover their prior peak.
Yep.
So most of the stocks that fall, but it was
most stocks are not worth buying and holding at all.
So he looked at the median and the average peak recovery is like 340%. But that's because it's skewed by a handful of stocks. So they even put a chart in here, which I did pull the chart. and you can see the recovery. There's a handful of stocks that if you bought when they were down that much,
Is that Carvana?
I'm sure it is. You did amazing, but most of the stocks did really poorly. Which is, again, just so you see these, this is the NVIDIA thing. Like NVIDIA fell 70%, Netflix fell 70%.
You know,
you idiot, why wouldn't you buy that?
This paper from Bessemer and also Howard Marks ruined me as a stock picker. Because I read Howard Marks stuff about second level thinking. I never bought Apple. Because I was like, this is first level nonsense. Who's buying Apple? This is like 2014. But all jokes aside, knowing this data like you and I do, and I still pick stocks, but as a game, not because I think I'm, gonna retire off of it. It's a bad idea. The data says, this is not me saying it. Most stocks are garbage. Most stocks don't beat treasury bills.
You know what I've been doing for the past couple months? I've been slowly but surely trimming all the individual stocks in my brokerage account and just pouring it in index funds.
Ain't nothing wrong with that.
I look at them less. I'm not constantly checking my Robinhood account.
Yeah.
It's just
valid.
Less, as Wes Gray would say, it's less brain damage.
Very valid. Counterpoint, content for the pod.
True. Oh,
don't worry, I'll carry the load for now.
You know what I was going to say? You were talking about IMAX before we get on here, and look at the chart of IMAX. Maybe this is a New Yorker thing, but you and Josh love to share good news about the stocks that you own. Is that fair? Josh loves Uber.
Josh is a big CrowdStrike Uber guy. However, if you control F, how many times have I mentioned IMAX in our group chat?
That's true. So I haven't even looked.
Hold on, whoa. How many times? I did it this weekend when there was an article in the New York Times about them.
I'd say a dozen mentions of IMAX
no
over the last
way.
2 years.
No way. Control F right now. Go to Slack. I'm calling you out. This is recency bias. I did it today. I mean, no, I did it over the weekend. You're right.
No, this is in-person chats as well.
Come on, I don't talk to you about IMAX in person. Get out of here.
Yeah, I've heard it on the podcast.
Listen.
All right.
No, look right now. You'll find at least a mention because I did it this weekend. I'd say you said 12. I'm gonna say 5 or less.
13 messages IMAX is mentioned here.
All right, I stand corrected.
Okay, a couple of them are from Josh. But
okay, but how many from me and how many of them cluster? How many is like in the same conversation?
All right, so I see 5 from you. All right. We're both right. Okay,
listen,
let's talk
about. Fine. No, I'm not embarrassed. I'm proud of IMAX. I feel like it's not too often that like the fundamentals and technicals line up. They are dominating and the stock is breaking out. Sorry, not sorry.
And you did learn. This is first level thinking from you. You go to IMAX. This is your Peter Lynch stock. You go to IMAX theaters lot. You buy IMAX.
Dude, the sound is wild. You better see it in IMAX.
My daughter went to IMAX for a field trip last week, and they didn't see a real movie. They saw some like National Geographic something on IMAX. They saw 2 45-minute whatever, and she was blown away. We've never taken her to IMAX before. She loved it.
Do her a favor and buy her the stock in a Upma account or whatever.
Okay. All right, let's talk about the real estate market. Okay. Carl Quintanilla on Blue Sky. Existing homes, slowest sales pace for any April since 2009. It is crazy that like the number of existing home sales are basically down to the housing crash lows, more or less. We're right there.
Well, yeah, rates are ridiculous.
When I still can't believe, I say this all the time, that rates are still 7% for mortgages. That it's gone on this long.
Well, we opened up the conversation talking about, should we be worried about the long end of the curve? Yeah.
But this is another thing where it hasn't totally derailed the market. It hasn't caused a huge something besides making it more annoying for first-time home buyers. And people
annoying? It totally derailed the housing market. It's an ice age.
I'm saying from a price perspective. I think most people would have assumed from a price perspective that would have been where the derail came from.
Yeah, it's worse. You haven't even gotten the prices coming down. That's
what I mean. If prices came down, at least it would have spurred activity. So it didn't do anything from that perspective. All right, from Sherwood. This is a good one. They say America's homes and the people who buy them are getting older. We've been talking about this a lot lately, like the median age for the first-time home buyer, but they show, so they say the existing home buyer repeat went from like 35 in 1980 to 61 now. We talked about this last week. The first-time home buyer is 38. But this is an interesting one. The typical home that people are buying keep getting older. So the median age of homes sold in the U.S. in 2012, it was 27 years. Right now, it's 36 years. Because they say only 9% of all existing homes in the U.S. were built in the 2010s, which is the lowest decade going back to the 1940s. So we basically stopped building homes in the 2010s because of the housing bust.
Wow.
Which is really, it's sad that like a boom and bust caused this to happen, and home builders just pulled back. They also show the median age of homes purchased in 2024, and you could click on your town. So I clicked on Grand Rapids. The median age in Grand Rapids, Michigan, is 42 years. And then they show the median the median price of a home that is less than 5 years old or that is 30 plus years, and it's like almost a $200,000 difference. So they're showing the price of the homes, the older homes versus the newer homes. This is, I guess, just why, you buy Home Depot and Lowe's. If they're not building enough homes, there's going to have to be massive renovations, right? The younger people coming in are going to want their HGTV house. Spaces to entertain, big garages, right? Outdoor spaces, all that stuff. All right, from the Wall Street Journal, a lack of starter homes. This is a good one too. This is one of the reasons houses are becoming unaffordable. In 1950, 92% of all homes built were 1,500 square feet or less. Remember the Pope's house we looked at a few weeks ago? That tiny thing, which apparently the town took into like receivership, and they said no one's going to buy the Pope's house. It's going to be like a shrine or something. I don't know what they're going to do with it. Now that number is 22%. So we're just not building smaller houses anymore. And this is, you can blame a lot of people. Part of it is the consumer. They don't want small houses anymore.
Yeah.
Right? You can blame home builders, but I think people want bigger houses.
Yeah.
That's kind of one of the reasons there's no starter homes anymore and they're not affordable. Obviously, builders, I think, get higher margins on and higher price points on bigger houses, but consumers want more amenities. Like if you look at what they were building in the 1950s, it was no frills, no nothing. It was 1,000 square foot, a couple of rooms, no walk-in closets, no 3-car garages, smaller houses.
Yeah. All right, moving on. Ben, you've been on this case talking about private equity coming for retail, coming for 401ks. So the FT wrote an article this weekend talking about that dynamic. The billionaire co-founder of buyout firm Tom Bravo has said wealthy individuals should be concerned about companies that private equity firms cannot sell, ending up at funds aimed at retail investors. Now, in the article, they didn't mention anything that it's actually happening. It was just sort of, beware.
So he's worried that retail is going to be the bag holder.
Yeah. Now, maybe
where do you think that phrase came from? It's a great phrase.
Bag holder?
There has to be a story behind that. Maybe someone can email in if they know it.
I'm thinking like a sack, like a satchel of coins that were like maybe empty, an empty bag. I don't know. Anyway, they're not in this business yet of going direct to retail. They're still all institutions. So maybe this is them talking their book a little bit. Isn't that illegal, or is it not illegal if you disclose it? Like if private equity giant A is buying one of their companies in the retail channel from their institutional backed funds, is that legal? I mean, obviously it's shitty, but if they can't find a buyer and they're like, all right, these schmucks will hold the bag for us.
I mean, listen, they have really great lawyers. They have 200-page prospectuses. Unfortunately. And I don't know, maybe it won't be as bad as I'm thinking. Oh wait, this is ChatGPT actually. It was a phrase from the 18th century. In the literal sense, someone stuck holding a worthless item, like being left holding a bag of stolen goods while everyone else runs away. Okay.
So
again, the problem is if this happens, we're not going to know about it for a very long time, like how the ramifications. It takes so long for these funds to play out that we're not going to know that these results are bad for like 5, 7, 10 years possibly. Because the marks are kind of old, and until you get an actual event, a company gets sold or goes public.
We've spoken about this before. Just a remarkable chart. This is from Morgan Stanley. Today, 87% of U.S. companies with over $100 million in revenue are private. Just wild. And then they share the private market share of global AUM is up from, it was hovering around 7% from 2013 to 2017. Then it broke out and now it's over 10%. I think it's probably going to go higher.
So this is the sales pitch though, right? If there's that many companies that are private with making that much money, that's like, hey, you're not getting access to these companies. You need access.
Yeah, I think it's legit. I also think that most people are skeptical or downright cynical of private investments. And I think that is understandable, but I think a little bit misplaced. There are areas of the market that you just cannot access inside of an ETF. For example, and I'm not saying that these are good, bad, or otherwise, but natural resources, infrastructure, litigation finance, GP stakes, secondaries, all of those sort of things. Again, no commentary on good, bad, or otherwise. There is potential diversification. There's potential upside. So I think it's prudent for most people to look at these things a little bit sideways, but to just, it's all bullshit. It's not all bullshit.
Right. Of course. Yeah. There's a ton of money in here, and many institutional investors have done well here. The problem is the range of outcomes is way wider.
Yeah. And also how do you evaluate it by the time it's getting to you, like all that sort of stuff, obviously.
That's why my only solution is it has to be in a target date fund, right? 20% of this target date fund is going to be privates, or 10% or 5% or whatever it is. I think that's the most prudent way to do it if it's going to be done.
Yeah. I agree.
All right. So we got a bunch of feedback from people living in San Diego, and everyone kind of agreed with our assessment. Housing costs are too high, but it's worth it. But we were there. We were at the golf course, and the golf course looked fantastic. And someone asked us, "Hey, do you guys golf?" And we both said, "Nah, we don't." I think the first time I ever golfed was 7th grade or something. So I started way late. My dad loves golf. He golfs all the time.
Really?
Oh yeah, my dad golfs 4 times a week, probably.
So why did you never get into it?
I was always doing something else. I had other sports going on. Yeah. I wasn't a dork. I don't know. One of those things. I'm kidding. It never, and I think because I didn't have the patience to put in the work and the time, it was infuriating me because I was bad at it.
Same.
Right?
Yeah.
And so I never put in the work. But so I thought about this, and I know it takes up a lot of time, and we just choose to do other things, right? Because golf could take up a lot of time. It's expensive, but I know people do love it. So I wrote this blog post, and I wrote some things that I'll just never spend money on, and golf was one of them. And I wrote all these other things. Some of them I was just being tongue-in-cheek and funny and whatever. This is kind of a throwaway blog post, I thought. And it kind of went crazy on LinkedIn because people commenting on it. Oh, I totally agree with you on 3 of those, but this one, you're an idiot. You're wrong. It's just a really good reminder that people love to judge others, but hate to be judged on what they spend on.
Yeah, that's a great point. Yep, you're right.
Right? But it's a fun game to play. Like, why would they spend on that? But it's all, my point is, Ryan Holiday had this thing where it's either works, family, or scene. Pick 2.
Work,
family, scene. Scene is like going out.
Okay.
So like, if you can try to do all 3, but if
I do all 3.
One of them is going to suffer though. If you put too much into one, another one is going to suffer.
I feel like I balance it pretty well. Not to brag.
All right, sure. You just have it all figured out.
If you need advice, you come to me. I got you covered.
I wonder how he does
Life
it.
guru.
All right. The point is though,
Actually,
if you go out too much, you're not at home with your family, and you're missing games and stuff, right? That's the point.
I'm not even going to caveat this with saying, "Oh, I teach." I really hate the life philosophers. Can't stand it. Cannot stand it. I'm sorry. I know it helps some people. My God, it drives me nuts, irrationally nuts. I watched the Liver King doc over the weekend. I don't know why. I think it was just, it was on and falling asleep.
Is that a Netflix thing?
Yeah. And needless to say, by the way, that was 3 years ago, 2022, that it came out that he was doing steroids. I feel like that was like yesterday. Whatever. Okay. Point is, he's a life guru guy who was obviously not exactly practicing what he preached, the 9 essential tenets, and you could look like me, and then he was just doing steroids. But he was like, yeah, I was full of shit. But it's just, to me, it's just so transparently obvious. Like, why are you telling people how to live their life? You don't have enough problems of your own. You have it all figured out that you're going to like give strangers advice, like mental advice. It's just so fucking tiresome. I hate it.
I do agree, but obviously there's always going to be a market for it because there's
How
hundreds
big is the
of
self-help market? Is it a $100 billion market?
and there's new self-help books all the time to reframe your mind, and obviously people need it.
Yeah. Well, I have mixed feelings because on the one hand, there are people that genuinely benefit, you know, so I don't want to like discount that entirely, but the people that give it on the internet.
Oh, I agree. And you do wonder how many people actually, it just goes in one ear, out the other, and then they're on to the next self-help. Because
And also it's like, bro, you're 26 years old. What are you talking about?
yeah, how much life experience do you actually have? Like there's this book I read a long time ago called Mindless Eating, and it was a psychology of food. And the one stat that stuck out to me all the time was 95% of people who go on a diet and lose weight end up gaining the weight back. And I think that's probably how it is with most self-help people. And I'm guessing the market for self-help, obviously you can graduate out of it, is just, I'm sure there's some people who are just constantly consuming this stuff and never actually applying it to their life. Right? You could take the building blocks from a lot of big self-help stuff and apply some of it, but it's like, well, what if there's a better way to do it and another way and yeah. Once you see through it though, it's I don't know. All right.
You know, the retirement stuff?
Oh yeah, real quick. So last week we talked about, there was a New York Times story about people taking Social Security early and because they were freaked out. And we got a ton of emails from people saying, and it was all the same exact tone. Hand up, I'm taking it early because I've done the break-even calculations and it wouldn't break even until I'm 77 or 80 or something, and I just don't care. I want the money now. Like I don't care what the data says.
I thought we were pretty fair on that last week. I thought that or maybe I'm wrong. Maybe I'm misremembering. But like, I totally get that. I'm not going to besmirch anybody for doing that.
But I think though, if you don't have enough saved, the best way to ensure that you beat the longevity risk is you work a little longer, and then that allows you to push Social Security back. So you work until, instead of retiring at 65, you work till 67 or 70.
Then judge not, lest ye be judged.
But obviously, no one wants to work longer. But this is interesting. So this is from IMF's World Economic Outlook. Based on samples in 41 countries, suggested that the average 70-year-old in 2022 had the same cognitive ability as a 53-year-old in 2000.
That sounds made up.
It does, doesn't it? So they're also saying this means, so people who are employed at 70 see a 30% uplift in earnings. But think about how many people are still working into old age now. I mean, the fact that it's a 22-year period or whatever seems almost, if you would have said in 1950, I don't know though. But this is my point of some people who aren't, there's a lot of people out there who are not prepared for retirement. Their solution is going to be working longer because you're living longer.
Yeah.
And your brain is staying sharper longer. Duncan
is saying that according to various market research reports, the market for U.S. self-improvement is $16.5 billion. It's a lot of coin.
Yeah. All right. I'm going to do it. I'm going to start just podcasting shirtless and going for runs all the time. And let's do it. All right. A bunch of people confirmed for us. You can book Grand Hyatt Baha Mar using Hyatt points. Michael, it's still there for you. They also said...
Hang on. There are blackout dates.
Yes, there are blackout dates.
So
they said there's a certain amount of rooms.
Christmas, for example, you can't use points. Unless I was told. I called them and
that makes sense.
I complained and...
They also said that if you use the Hyatt points, it's a really good credit card because there's no taxes or resort fees with points, which is pretty good because those resort fees are ridiculous.
It's so expensive.
All right.
What?
You trying to talk me out of it? Because
No, it's phenomenal. No, that's
twist my arm.
No. It's a great time. All right. Lucas Shaw tweeted, Netflix's share of TV viewing is flat from a year ago. YouTube grew by 3%, excuse me, more than every other streamer combined. My kids are on YouTube a lot these days, and I don't love it. They're just watching garbage.
Yes, I've been thinking about this a lot. My kids do the same, and I just think about this.
I've been saying no YouTube a lot.
I have too. We're putting like limits on it now. But I look at some of the stuff that I grew up watching, cartoons and stuff, and is it really that much worse than the stuff we grew up on? I don't know.
I think so.
You think
I was
so?
watching Spider-Man. That taught you how to be a man. And I don't know.
Great. Spider-Man was a life coach. or Aunt, what's the uncle's
With
name?
great powers comes great responsibility. That was Uncle
Yes.
Ben.
That sounds like something a life coach would say.
Yeah. All right. So this is the article that I shared over the weekend or on Friday, Ben, that I think you called me out for. But the article was in the New York Times, a reputable publication in the eyes of some people. Why is IMAX suddenly everywhere? And this is the lead. Tom Cruise had a major request. He wanted IMAX to show his latest Mission Impossible movie, and only his movie, on its giant screen for 3 weeks. It is the kind of exclusive run that few films get. So, Mr. Cruise went straight to the top. He reached out to IMAX's chief executive, Rich Gelfond, who had some requests of his own. He wanted all the Mission Impossible premieres, along with press screenings and influencer screenings, to be held at an IMAX theater, and he wanted Mr. Cruise to endorse the company's screens during his global press tour for the film, which opens this weekend.
Did he also want to teach him how to eat popcorn?
Holy shit.
the viral video of Tom Cruise eating popcorn.
So he ate popcorn like how some people eat peanuts. And I think even that's weird, eating peanuts, but whatever. I'm not here to judge how people eat their food. I guess I am actually. That's a lie. I am judging. When you have your handful of nuts or popcorn or whatever it is, and you just, I guess there's a hole over here, and you just throw it in, it's just fucking weird. Who does that? I've never seen anyone do it with popcorn. It was very bizarre.
Okay, so IMAX relented and gave him all his demands, or they each gave each other their demands?
I forget what it said, but last night I went to the theater, saw a 7:10 showing. I got there, ready to get some popcorn, and I oscillate between a Sprite and a Diet Coke, depending on my mood. That's the only place that I drink soda, actually, for the most part, is at a theater. And the line was ridiculous. I almost took a picture for the show. I didn't, but there was I think 4 registers that were open, and I bailed. I said I'm going to miss the movie, and then I tried to come out of the movie at so the show was at 7:10. I went in there. I got there at 7:05. I went in there like 7:25. I'm online for 20 minutes. I tried to come out again. The line was still so long. So they captured 30. I got an email from IMAX over the week.
Even on a Monday night, huh?
Well, it was it was a
holiday.
All right. So the numbers were. IMAX kicked off the summer in record fashion. $31 million in box office for Mission Impossible, including a stunning 20% of the domestic. 20%. And it's probably 1% of theaters. It's wild.
That is crazy. So
yeah.
If people are going to get out and go to the theaters, they want a premium experience. That's your selling point, right?
That's exactly right. This is from the Journal. It was a blockbuster Memorial Day weekend for Hollywood, led by A Little Blue Alien. Disney's remake of Lilo and Stitch topped the box office with an estimated $183 million. Mission Impossible did $77.5 million. All told, domestic ticket sales totaled $326.7 million for the holiday weekend. The prior record, not accounted for inflation, was $314 million in 2013. So this is great news for the theater, for the movie industry, because the first quarter was garbage.
My kids are excited about Lilo and Stitch. I'm sure you're taking your kids to that one.
I'm going to take them. Yeah.
So this is crazy. We talked about the drawdowns with individual stocks earlier. After the dot-com bubble,
IMAX probably fell, 95%?
98%.
Yeah.
And came all the way. It's one of those stocks that did come back. Now it's still in a 35% drawdown from the high in 2015. You got room to run here.
I think so.
All right, I've got a question for you. I want to know if I'm a curmudgeon or if I have a point here.
You're not a curmudgeon. Dude, instead of honking at the car next to you, you climbed out your window. You're the opposite of a curmudgeon.
Okay, well, I didn't say anything, but this is just in my head.
Of course you didn't.
So breweries have figured it out, right? If you want to get like millennials and their kids there, you have to have the beer and the food, but you also have to have like games or an outdoor spot for the kids, so the kids can play while the parents sit there and have a beer, right?
Mm-hmm.
So I frequented 2 breweries this weekend, and waiting in line to get a beer at both places, the same thing happened. So it stood out to me. The people in line in front of me, and there's a big line of people behind them waiting to get a beer, right? They ask for a taste of a beer before, like one of the little cups.
No, sorry.
And they taste it and they sip it and they go and think and think.
No.
Yeah, that's pretty. You should not be allowed to taste a beer before you order it.
No.
I'm sorry.
No.
You can't order food at a restaurant and try it and then send it back.
You're 100% right.
Right? Like, you shouldn't be able to do that. If you buy a beer and you don't like it, you're out $7.
Well, guess what? Drink
get a different one.
Throw it out, get a new one.
Yes. This should not be a thing. I would tell, if this was my bar, I'd say no. Buy the beer, don't buy the beer.
One of my strong points, I'm very courteous to others around me. I'm a very considerate driver. I'm a considerate walker. I'm a considerate line attendee, line queuer. I care about the person behind me.
Right?
Yeah,
especially if someone's behind you.
It's very rude. It's very rude.
Thank you.
I was at the beach this weekend talking to my cabana boy, and I was asking him because he told me that he went to the beach club next door growing up, and I worked there.
It just sounds weird to say that you have your own cabana boy. That like doesn't sound sounds
By the
illegal.
way, growing up, I knew one person that went to a beach club in my town. And I'm sure there were others, but I knew one. I went to one. I visited once or twice growing
So now
up.
everyone has one. And a beach club is just you have your own cabana and there's a pool there and a restaurant and stuff.
It's great.
Okay.
So I spent maybe 5 years as a cabana boy. I think from like 16 to like 20, something like that. So I was talking to him, and I'm like, "Oh, you were in the sand court." And I'm saying to Robin, I said, because Robin and I met at the beach club, I said, "Who was the cabana boy in the sand court in 2002?" And he goes, "I was born in 2006."
Yeah, high school job. So do they work on tips essentially?
Yeah.
So you gonna get a tax break?
Ooh, that is a good question. Hey, you ever been hit by a car?
No. Why?
I got hit by a car last week.
Okay. Like a bump or a hit?
I would say it was probably in between. Well, no, I didn't get hit. Like,
New York? I'm surprised more people don't get hit by cars in New York City.
yeah, so I was crossing the street.
AirPods in?
No, I was walking with a friend, and she backed up into me because I guess she was too far into the crosswalk.
Okay.
So she backed up into me. I'm like, where are you going? You're on 7th Avenue. And it hurt. She hit me in the arm.
Did you hit the car? Like, hey,
no,
boom.
No, but it hurt. I was.
Did they know they hit you?
Yeah, she was like very apologetic, but she was only going 4 miles an hour tops. But it actually hurt. So can't imagine getting hit by a car going more than 4 miles an hour.
Was it an SUV or a car?
I don't remember.
Okay, that's kind of funny actually.
So, all right, Mission Impossible, Dead Reckoning. Is that the name of it?
You saw the one before this, right?
Wasn't it one before it called Ghost?
I thought that was Dead Reckoning.
Is this Dead Reckoning? What was this called?
I can't remember.
God, I'm old.
The Final Reckoning.
Oh, the Final Reckoning.
The other one was a Dead Reckoning.
Yeah. All right, so the movie
last one didn't get great reviews, but I still liked it.
I enjoyed the shit out of the last one. This one, however, I had a great time. But now I've said this before. Actually, I feel like I've said it the last 3 weeks. That like I have trouble following plots, especially in action films, which is like sort of they're besides the point. But this was so convoluted. Like the story made no sense. Not that it matters to the movie going experience, but it was so disjointed. I'm excited to hear your take on it. But some of the things that TC did were just unbelievable.
He's a maniac.
Unbelievable. Like the peaks of the action scenes were as good as it gets. But it was, I mean, there was a lot of fat on the movie. It was 2 hours and 49 minutes.
Yeah, that's long. Because the last one was 2.5 hours or so.
Yeah. But so yeah, not the best Mission Impossible, but I don't want to complain. I had fun. And that's when I go to
movie, right?
I'm looking for fun. Oh, that's a theater movie. That's an IMAX movie. Not trying to talk my book there, but it really is an IMAX movie. Did you finish The Studio?
No, I finally watched your Ted Sarandos episode last night. I thought that was funny how everyone just kept thanking Ted Sarandos. that was a good inside joke. So I might have 2 left, I guess.
Okay. All right. Well,
I'm finishing up some other old shows that I'm sunk costing. So just go ahead and I'll tell you.
Okay. So Seth Rogen and Evan Goldberg were on the Town, a 2-parter, talking about the making of and the goals. And I think that the show went a different direction than I thought it would. I thought there'd be like a storyline, like through the season. There wasn't. Each episode is its own thing.
Yeah.
Man, I enjoyed the shit out of it. Like, no apologies. I had a great time. I thought the finale was hilarious. I really, really enjoyed it. Big fan of the show.
Yeah, again, it's hit or miss for me. Like I think the good episodes are really good. The bad ones are like, eh.
Yeah, but is it an hour?
No, it's like a half hour, so 40 minutes maybe.
Yeah, so it's it's quick. If you don't like,
and
whatever.
the fact that there's so many guest stars in each episode is
right. Anyway, so in the finale, Bryan Cranston, you're gonna die. He steals the show.
Okay, he's good. We're finishing 2 shows now that it's kind of like I equate it to a good novel. Like there's a lot of good novels that start out really good and the setup is amazing and it's just hard to find an ending, right? Because And so we're finishing You, which is a serial killer show on Netflix with Penn Badgley, and I think it's the 5th or 6th season, and it just went too long. And we finished it, and the ending was okay. But I feel like there's no good way to end a serial killer show. It's like the Dexter went too long and didn't have a good ending. There's just no good way to do this. And then we're finishing The Handmaid's Tale, which is, I think we're up to the finale now. And it's one of these things where, yeah, the start was just way better. And we're hanging on because I think my wife liked both these shows more than me. And we're finishing because we started them.
Are they still making new seasons or is it over?
This is the last one. Handmaid's Tale this is it. So there's one more episode. And it's kind of like, yeah, these shows were really good at the beginning, and I don't know if I needed to see how they concluded. I had to because I needed to know what happened, but it's the quality went down after a while. That's all I got.
Market's up almost 2%. Kind of wild. Not kind of wild. Wild. It's a bull market.
The stock market wanted to move higher. I do wonder if we never had the tariff thing in the first place. If Trump just said deregulation, tax bill, would we have had another 20% up year this year?
Yeah.
God knows. Maybe we still. But that seems to be, maybe that's the baseline. Not saying the market is even.
Stocks will go up 20% every year unless something bad happens, says Ben Carlson.
No, in a rip-roaring bull market with a lot of animal spirits, I don't know. Maybe the baseline for this year was a 15% or 20% up year, and the tariff had pulled us back from that, the tariff stuff. It really is kind of incredible how much of an about face there's been. It seems like, of course, it shouldn't have been a surprise, but it still is kind of surprising for the rhetoric we heard in April. I think. All right. What else we got?
What do you mean? In general, in life?
Yeah.
Summer? Can you believe how fast summer went? That's a preview for 12 weeks from now.
So on a year-to-date basis, the S&P is now up 1%. We're back in the black.
All right. Animal spirits at thecompoundnews.com. Thank everybody for listening, for emailing. We'll see you next time.